studies. Day by day, the students are becoming less. Why? Did you study at home? Sure. The notes which I have given you, you must have studied those notes. Yes or no? Okay. So tell me, yesterday we started with PGBP and which concept we were doing yesterday? Which concept? Depreciation, no? So depreciation, in depreciation, we completed 32.11 depreciation on SLM basis. Yes or no? Now today, many things are to be completed. Many things are to be completed today. See, now normal depreciation in the case of assessees who are engaged in any business other than power business? No. The assessees who are engaged in any business or profession. Assessees who are engaged in any business or profession. Okay. Now these assessees who are engaged in any business or profession, for them the normal depreciation calculation will happen in the following manner. Okay. The value of the block of assets will be determined, and on that value the rates which are prescribed in appendix 1 to rule 5.1 will be applied. By applying these rates, the depreciation will be calculated, and that depreciation will be allowed on WDV basis. So this normal depreciation in this manner, this is block of asset, this is block of asset, block of assets. Okay, no? So the block of assets, why it is not appearing here? Green color is not appearing. There is some problem in the color. Okay. Now see, this normal depreciation is applicable to all assessees who are engaged in any business or profession. So my next question is, can the assessees who are in the power business, can they follow this? The answer is yes, because there is no restriction, nowhere it is written that the assessees engaged in power business cannot follow this. If you are an assessee engaged in power business, you can also claim depreciation on WDV basis on block of assets. Yes or no? But for that, in the first year in which you have started your business, in that year only you will have to take this option. And if you will take this option in the first year, then in the first year and every subsequent year, your normal depreciation will be calculated like this, even if you are in the power business. But in the first year, if you don't exercise that option, then in the first year and in every subsequent year, your depreciation will be calculated on individual assets on SLM basis. Yes or no? Yes or no? Now, what you are supposed to do here? You are supposed to calculate the value of, and on that value you are supposed to apply the prescribed rates. Where the rates are prescribed? Appendix 1 to rule 5.1. Okay. Now by applying these rates, whatever depreciation will be calculated, that will be allowed on WDV basis. See, to calculate the value of block, it is very simple. You are supposed to take, first of all, you will have to create a block. Now what is the meaning of the block? Block means it is a group of assets which are of and having same rate of depreciation. So that is the meaning of block of assets. Now when you will make the block, the individuality, that is identity of the asset is lost. Now there is no individual asset. Now only the block is there in existence. The moment your asset goes in the block, its identity is gone. Now you will not identify a single asset because the identity is given to the block. Now how do you create a block? Very simple. How do you create a block? Very simple. See, just a moment. Okay. Now see, first of all, same type should be there and same rate should be there. Let's take an example of plant and machinery. Plant and machinery. This block is created by you for the first time in this year. Okay. So in your business, you might have acquired some plant and machinery. Okay. And the rate of depreciation of this plant and machinery was 15%. The rate of depreciation was 15%. So see, now all the assets which will be there under this block, all the assets will be plant and machinery. Furniture will come in the block or will not come in the block? Building will come in this block or will not come? For building there will be separate block. For furniture there will be separate block. Yes or no? This block will be created for plant and machinery. In this block all the assets are plant and machinery. But remember, for plant and machinery also different rates are there. Different? Now for example, if plant and machinery is there, 40% rate can also be there, 30% rate can also be there, 15% rate can also be there. So which type of plant and machinery will be classified here? Only those plant and machinery on which the depreciation rate prescribed is 15%. So all those plant and machineries you will classify here. For example, in this previous year 24-25, okay, previous year 24-25, you started your business. Before that, the business was not there. So you started your business in 24-25. So in 24-25, whatever plant and machinery you will buy, because of that plant and machinery, this block will be created for the first time. So tell me, was there any asset already in the block or this block is created for the first time? So opening WDV, what did I say? Opening WDV of the block as on 1st April 2024 will be, there are no assets in the block and no value in the block. Yes or no? Now whatever assets you have acquired in this year, those assets are coming in the block, meaning additions happening in the block. What is happening? So in the opening, whatever assets were already there in the block from earlier, in those assets this year few assets are added. So meaning additions during the previous year, during previous year 24-25. Now you have to see whether these additions, whether these assets which are purchased in this year they are put to use for less than 180 days or 180 days or more, because I'll have to separate it right now only, because the assets which are purchased in this year and put to use in this year for less than 180 days, on those assets will I get full rate of depreciation or I'll get half rate of depreciation? Half rate, no. So for example, in additions during the previous year and put to use in this previous year only, yes or no? Additions during the previous year 24-25 and put to use for less than 180 days and greater than equal to 180 days. Now do you remember my birthday? So there were some assets which were purchased and put to use prior to my birthday, more than 180 days. There were some assets which were purchased and put to use on or after my birthday, yes or no? So for example, two plant and machineries and two plant and machineries, plant and machinery A and plant and machinery B, plant and machinery C, sorry, here it will be C and D and here it is A and B. So A and B, two plant and machineries were acquired in this year and put to use for 180 days or more, and C and D, two plant and machineries were acquired and put to use for less than 180 days. Those plant and machineries are there. Okay. Now let's take that for these two plant and machineries there was 4 lakh rupees of the 4 lakh was the actual cost. 4 lakh was the actual cost of those plant and machinery. So that 4 lakh will be coming in the block. Then there was 2 more plant and machineries. The actual cost of those plant and machineries was 5 lakh. So now there are how many plant and machineries in the block? 4. 2 plus 2, 4. And what is the total cost of these plant and machineries? 9 lakhs. See, instead of claiming the depreciation on each asset separately, why not to add the actual cost of all the plant and machineries, all the assets, and apply one rate on one value? It will become more easy. Instead of calculating and claiming depreciation on single asset, half rate, full rate, half rate, full rate, yes or no, on one asset, second asset, third asset, fourth asset, it is better. Add the value of all the assets, add the actual cost of all the assets which are of same type, having same rate, create a block, and on the entire value, on the entire cost of all the assets, apply one rate. No, it will be more easy. Yes or no? So now tell me, what is the total value? And how many assets are there? Is it necessary that always the plant and machinery will come in the block? Some plant and machinery can go out of the block also. Sale, scrap, salvage, yes or no? So the plant and machinery which is going out of the block, will it be added or it will be deleted? So deletions will be minus, less deletions during the previous year. So during your previous year, how many plant and machineries are sold, transferred, yes or no? This is the first year, no? Will we sell? No, we don't want to sell any machine. Okay. Now what is the value? Nothing. Tell me how much is the total. Now as on 31st March 2025, 4 plant and machineries are there in the block, having a total cost, total value of 9 lakh. These are the assets whose cost can be claimed in the form of depreciation, because these assets are there in the block as on the last day of the previous year. On these assets the depreciation can be claimed. Yes or no? Now tell me, can I say this is my depreciable value? This is my depreciable value. These are the assets having this much value as on the last day of the previous year in my business. On these assets I will be claiming the depreciation. Now tell me, out of this value, out of this, can you see there are some assets in the block as on the last day of the previous year which were purchased in this year and put to use for less than 180 days. These assets are also there in the block. Yes or no? So out of this value, the value of those assets which are purchased in this year and put to use for less than 180 days, on that will you calculate full rate or half rate? Simple. So what are you going to do out of this 9 lakh on 4 lakh? The rate of depreciation applied will be full rate or half rate? 7 point. And what is the balance amount? 5 lakh. On that the depreciation will be allowed at full rate. Yes or no? So 4 lakh into 7.5, 30,000. 5 lakh into 15%, 75,000 total. So 30,000 plus 75,000 will give you 1 lakh 5,000. My dear friends, this is the amount of depreciation under section 32 subsection 1 clause 2. Will you remember this? This is normal depreciation. Now tell me, how much was the total cost of the assets? Out of that total cost, this much cost will be allowed in this year in the form of, so what will be the closing WDV as on 31st March 2025? In the closing, 4 assets will be there. Yes. But the value of 9 lakh will not be there, because out of this 9 lakh, 1 lakh 5,000 will be allowed as a depreciation in this year. So how much will remain? 7 lakh 95,000. Yes or no? Yes or no? Now tell me, will these assets be used in my business in the next year? So what is my next year? Previous year, 25, 26. So in the previous year, 25, 26, will this block of assets be used in the business? Yes. What was the block? Plant and machinery. Depreciable at what rate? Now tell me, if this will be used in the next year in my business, so was there any opening WDV as on 1st April 2025? How many assets were there? And how much was the value? 7 lakh 95,000. Yes or no? Now in the next year I have to see, in 25, 26, is there any addition to this? It is not required that the asset which I have been using in the business, I will be using the same assets. I might acquire new assets also, no? Hello. So plant and machinery A, B, C, D already there in the block. Now I am buying 2 more plant and machineries. Plant and machinery E, plant and machinery F. Yes or no? So tell me, will it be added? So can I say additions during previous year 25, 26 and put to use for greater than equal to 180 days and less than 180 days. So tell me, plant and machinery E I have acquired and plant and machinery F I have acquired. One plant and machinery, one plant and machinery. The cost of this plant and machinery was 1 lakh 25,000. The cost of the other plant and machinery was 2 lakhs. Possible, not possible? So tell me now, how many plant and machinery should be there as on the last day? 6. What will be the total actual cost? Remaining actual cost of existing machine. Remaining actual cost of existing machine. And actual cost of those machines which are acquired in this year. Total is 11 lakh 20,000. Are you getting me? This should be there as on the last day of my previous year. But unfortunately, during this year, out of these plant and machineries, some plant and machineries were sold. Some plant and machineries were addition or deletion. So I will say less deletions. Deletions during the previous year 25, 26. Now the deletions are happening. For example, I am selling 3 plant and machineries. Out of 6, I have already sold at different dates during the previous year. Are you interested in seeing the date on which the machines are sold? No, no need to see. Are these machines sold during the year? Yes. So these machines will not be there as on the last day of the previous year. On these machines, you are not going to get any depreciation. Yes or no? So remove 3 machines. Now, by selling these 3 machines, can you recover 5 lakh rupees? By selling these 3 machines, can you recover? So can I say, out of the 11 lakh 20,000 of cost, out of the 11 lakh 20,000 of cost, how much cost we have already recovered? 5 lakh. To that extent, the depreciation will not be allowed. Hello, sir. So 5 lakh will be reduced here. 5 lakh will be reduced here. So tell me, how many machines are still there in the block? And what is the value? Now tell me, as on, this is the depreciable value. As on 31st March 2026. These 3 machines are there in my block as on the last day of the previous year. And what is the cost still remaining in the block? So only the cost to this extent can now be allowed in the form of depreciation. Yes or no? Now your question should be, sir, this one machine which was purchased in this year and put to use for less than, is it still there remaining with me? If the answer is yes. If the answer is then can I say to the extent of this 2 lakh out of 6 lakh 20, to the extent of this, depreciation will be allowed at half rate. Yes or no? So I will have to again split. Getting my point? But wait. These 3 machines are sold. These 3 machines are sold. In these 3 machines, this machine was also sold. This machine was also. So can I say the machines which are remaining does not have this machine as on the last day, which was purchased and put to use for less than 180. Getting my point? So if this machine is not available as on the last day of the previous year, no half rate depreciation, then on the entire value you'll have to claim full rate. Getting my point? Entire value you'll get full. Have you sold this machine? Yes. So the machines which are remaining as on the last day, in this, can you see this machine? No. So on the entire value you will charge full rate. But the machines which you have sold, in that you have not sold this machine, meaning that the machines which are remaining as on the, in this machine, can you see this machine also? So out of this, on 2 lakhs, half rate and the balance full rate. Yes or no? So let's assume that this machine is not sold. This machine is still there as on the last day of the previous year. So tell me, out of this 6 lakh, 20 on 2 lakh, the depreciation will be at full rate or half rate? 7 point, that will be 15,000. And on 4 lakh, 20,000, the depreciation will be 15%, 60,000. Yes or no? So total is how much? 75,000. Sorry, it is not 60,000. 63,000. 63 plus 15, 78,000. Can I say this is the depreciation which you have calculated under section 32, 1, 2. This is the normal depreciation. Now tell me, what was the total cost of the machines in the block? Out of this cost will be allowed in the form of depreciation. So tell me, what will be the closing WDV as on 31st March 2026? How many machines will be there in the block? 3. And out of 620, 78 will be allowed. So how much amount will remain? 5 lakh 40. This is the closing in this year, will become opening in the next year. Likewise, the same calculation which we have done for this year, in the next year also we are going to do the same type of calculations. Yes or no? Did you understand the calculations? Easy? Now, should I confuse you a little bit? Little confusion, but I will clear that confusion. Okay, no? Now pay attention. See, in my block is of plant and machinery. What is the block? Plant and machinery. Depreciable at the rate of? I am taking a new example, guys. I am taking a new example. For example, the block of plant and machinery has opening WDV as on 1st April 2024 during your previous year, the opening WDV, there were 4 assets in the block. How many assets? And the value of these assets were 5 lakhs. What is 5 lakhs? These 4 assets were acquired in the past at some actual cost. Out of that actual cost, some actual cost was already allowed in the earlier years in the form of depreciation. So out of that actual cost, some actual cost is still remaining, 5 lakh rupees. Yes or no? Now in this, will you do the additions? Additions during previous year 24, 25 and put to use for greater than equal to 180 days and less than 180 days. Now let's take one example, one asset. This one asset, the actual cost was 1 lakh, and this one asset, the actual cost was 4 lakhs. Getting my point? So total is how much? 6 assets are there in the block. 6 assets are there in the block, and the total of the actual costs will be 10 lakh. Now see, this should be there as on the 31st March, but this will not be there. Why? Because during the year, out of these 6 machines, few machines can be sold also, transferred also. So will that be additions or deletions from the block? So less deletions during previous year 24, 25. So now let's say out of 6 machines, 4 machines are sold. 4 machines are for rupees 4 lakhs. For rupees 4 lakhs. So now tell me, 2 machines are still there? Yes or no? And how much is the cost? What will you do? Come on, tell me. What will you call? Or what will you do? First thing you have to check whether this machine is still there. Whether this machine is. If the answer is yes. If the answer is, then out of 6 lakhs, on 4 lakh, half rate. First step. And on the balance amount? On the balance amount. So out of 6 lakh, on 4 lakh, you will calculate half rate, and on 2 lakh, you will calculate. This is the normal case. This is the. Now see, what if I have sold 4 machines for rupees 8 lakhs? Possible, not possible? So what is the total value remaining? Now ask yourself a question. Ask yourself a question. In these 2 assets, still this plant and machinery remaining? If the answer is yes. If the answer is, then on this 4 lakh, the rate of depreciation should be half. But the amount remaining in the block as on the last day is less than the actual cost of that asset which was acquired in this year but put to use for less than 180 days. Now what will you do? Can you now split 4 lakh, half rate, balance, full rate? Can you do this? You cannot do this. Why? Because see, this machine is still there with me. This machine is still there with me. I have not sold it. Yes or no? But the value which is remaining as on the last day is less than the actual cost of this machine which was acquired in this year and put to use for less than. What will you do? Simple. On the entire value, apply half rate of depreciation. On the entire value, you will apply half rate of depreciation, because that machine is still there in the block and the cost of that machine is higher than the remaining value in the block. Getting my point? Hello sir. So what will be the depreciation here? 15,000. Yes or no? But wait, what if this machine is not there as on the last day? This machine is not there on the, then on the entire value we would have calculated full rate. So instead of 7.5%, now it will be 15%. Yes or no? Will you remember this thing? Sure sir. So this was one concept. What will happen if the value of the block remaining as on the last day of the previous year is less than the actual cost of that machine which was purchased in this year and put to use for less than 180 days? In that case, on the entire value remaining as on the last day, the rate of depreciation will be taken as half rate. Yes or no? Now this concept is done. Now I am taking another example. Okay. Now I will create 4 cases. How many cases? Pay attention. This is opening. This is additions greater than equal to 180 days and less than 180 days. Then there will be a total. Out of that, deletions will be there. Yes or no? Now first case I am saying, first case. In the first case, what is happening? Let's take an example. It is a block of plant and machinery having 15% rate of depreciation. Okay, no? So in the opening there were 4 assets. What was the value? Example, it was 6 lakhs. One asset purchased in this year and put to use for 180 days or more, less than 180 days. Amount is 2 lakhs, and here also it is 2 lakhs. So how much is the total? 6, and it will be 10 lakhs. Yes or no? Now pay attention. Out of these assets, 4 assets are sold for rupees 7 lakhs. For rupees. Understanding? Now see what I am going to do. I am copying this thing and same thing I am writing, but the only difference is instead of 7 lakhs, now the amount is 11 lakh 20,000. Can you see the difference? Can you see the difference? Now my question is, as on the last day of the previous year, as on the, in both the cases, 2 assets are there, and here the value will be there. How much? 3 lakh. 2 assets are there, but there will be no value remaining in the block. No value, and negative 1 lakh 20 will be there. Negative 1 lakh 20. Now my question is there, as on the last day of the previous year, assets are there in the block or not there in the block? Value is there in the block or not there in the block? In the first case, my dear friends, in the first case, asset is also there, value is also there. As on the last day of the previous year, here you will calculate depreciation. Here you will calculate, on some value it will be half rate, on some value it will be full rate. Yes or no? But tell me, assets there or not there? Value there or not there? Not there. Not there. If any one item is missing, if any one item is missing, or both the items are missing, there cannot be a claim of depreciation. If you want to claim the depreciation on these 2 assets, then have some value, no? What value we should allow you in the form of depreciation? If no value is remaining, bloody entire 10 lakh rupees value which we were supposed to give you as depreciation, entire 10 lakh you have recovered. Have you recovered the entire 10 lakh by selling few assets from that block? So even if some assets are remaining on those assets, now there is no value remaining for those assets, because the value of those assets also you have recovered. Getting my point? Since no value remaining, no cost remaining as on the last day, what should we allow you in the form of depreciation? So can you claim depreciation over here? Can you claim depreciation over here? So here the depreciation cannot be claimed because there is no value in the block. Yes or no? What will happen here? Tell me. Excess amount. Excess amount was 1 lakh. This 1 lakh 20,000 now will be treated as short term capital gain under section 5050. So there is one section 50 in the capital gain which says that any amount which you recover by transferring the assets forming part of block, transferring the assets forming part of the bloody, the assets which are there, which are used in the business, are also my capital assets only. And for these capital asset, cost was supposed to be allowed under the head PGBP in the form of depreciation. Entire cost we have recovered. Anything over and above the cost cannot be taxed as PGBP. You will have to tax it under the head capital gain. To the extent of cost, whatever recoveries are happening, adjust in the block value. But anything over and above the cost which you will recover will be considered as your capital gain and will be taxable as short-term capital gain. Yes or no? Yes or no? These two cases you understood? Now see, same cases. Sir, same cases. Copy. This was your case number 2, no? This was your second case. Okay, no? Now, same two cases I will copy and paste. Now, the case will be third case and fourth case. Case will be third case and fourth case. Now, see what I am changing. Okay, what I am changing. Please check the change. Can I transfer all the assets of the block? In the first two cases, all the assets of the block are not transferred. There are some assets still remaining in the block is still there. Block is still. So this situation is known as block does not cease to exist. Block is still there because there are two assets in the block. Next year, what did I say? Next year, the block will be carried forward. Two assets, hello, with remaining value after claiming depreciation. Closing WDV. First we will calculate depreciation, reduce that depreciation out of 3 lakhs. The balance amount and the two assets will go in the next year. Yes or no? In the second case, two assets are still there in the block, but how much value? Nil. That will also go in the next year. Opening WDV will be two assets. And what will be the value? Nil. That will go in the next year. Getting my point? But now in the next two cases, what you can see? All the assets in the block, all the assets in the transferred. Now tell me, will there be any asset as on the last day of the year? So this situation is known as block ceases to exist. This situation is known as. Now tell me my first question. Are there any assets as on the last day of my previous year in the block? No assets. No assets in the block. But is there any value remaining in the block? Even if we want, we cannot allow you this value in the form of depreciation. Why? Because this value should represent some asset as on the last day of your previous year. There are no assets representing this value. Hence this value cannot be allowed in the form of depreciation. Will you claim depreciation over here? No. Sir, so this 3 lakh entire value will be my loss, but not under the head PGBP. This will be treated as your short-term capital loss under section 5050. What will be your short-term capital loss? Under section 5050, what will be the amount of your loss? 3 lakh. The remaining cost which could not be now claimed under the head PGBP in the form of depreciation. This remaining cost will now be considered under the head capital gains as your short-term capital loss. Getting my point? Yes, sir. Now tell me, assets in the block or no assets in the block? Value in the block or no value in the block? So no assets, no value. Can you claim depreciation? No depreciation. So it will result into short-term capital gain under section 50. How much short-term capital gain? The amount which you have recovered over and above the cost is how much? 1,20,000 will be treated as short-term capital gains. Easy, difficult? Easy, no? No. Made easy. Say thank you. Okay. So this was your section 50. Now see, pay attention. This entire discussion which I have done. Okay. What is the meaning of block? I have already told you. Then how to calculate this block value? Different way. All these things I have already covered in the examples which I gave you. If the depreciable value remaining as on the end is less than the cost of that asset which was acquired in this year and put to use for less than 180 days, and that asset is still remaining in the block, then on the entire value you have to charge half rate. I have already discussed all these things. Yes or no? Now see, block does not cease to exist and block ceases to exist. I have covered this entire part through 4 examples, and these 4 examples are given here also, but the amounts will be a little different. Yes or no? Yes or no? Now see, the depreciation rates which are applicable on the block of asset. What is the meaning of block? Did you understand? How to calculate the value of the block? Did you understand? And from that value, how to calculate the depreciation? By applying the prescribed rates on the value. On some value half rate, on some value full rate. There might be short-term capital gain also, short-term capital loss also. Entire calculation we have seen. But the rate to be applicable will be prescribed rates. Prescribed. And rates are not prescribed for each asset. Rates are prescribed for block of assets. So if this type of asset is there, create a separate group because they are chargeable at this rate of depreciation. If this type of asset is there, create a separate group, create a separate block. On the value of this block, the rate will be this much. Yes or no? So those rates are given in Rule 5.1, Appendix, and these depreciation rates are given in your ICI study mat, page number 3.210. You will read that table. You will read that table. Yes or no? But the important rates, which you have to remember, are for building. For the rate remembered is 10%. If nothing is given in the question, you will remember 10%. Yes or no? Then on furniture and fixture, the rate will be 10%. Then on plant and machinery, see, normally, generally, it is 10%, 15%. Yes or no? This is the general rate. But if the plant and machinery happens to be computer, then the rate will be 40%. If the plant and machinery happens to be books, then the rate will be 40%. If the plant and machinery happens to be, for example, vehicles, then the general rate will be 15%. Getting my point or not? These are the few rates which you are supposed to keep in mind. But don't worry, majority of the times the examiner will give you the rates also. But the table containing the rate applicable for each block is given on page number 3.210 ICI study mat. You just have to refer to the table once. That's it. Getting my point? Hello? But out of those, these rates are important, frequently asked. Getting my point? Next one. See, now the assessee who is engaged in power business usually calculate the normal depreciation. On what basis? SLM basis. 32.1. Does he has the option to claim depreciation on WDV basis? Yes. He has the option to claim depreciation on value of the block on WDV basis. But this option he has to exercise in the first year, the year in which the business was commenced or set up. Yes or no? And in the first year and every subsequent year, now he will claim depreciation on value of the block, on WDV basis if he exercises this in the first year. But if he does not exercise, then in the first year and every subsequent year, depreciation will be for individual asset on SLM basis. Yes or no? Understood? Now, let's come to additional depreciation. What depreciation? Additional depreciation. See, if the assessee is any person, but he is engaged in manufacturing or power business, and he has acquired and installed any asset or new plant and machinery. So you have to acquire and install. You have to acquire and install what? New plant and machinery in your business. What is your business? Or so in your manufacturing or power business, you have acquired and installed new plant and machinery. So on the actual cost of that new plant and machinery, 20% extra depreciation will allow in the first year only. Will you get normal depreciation on this plant and machinery? Yes. But apart from that normal depreciation, extra 20% depreciation will be allowed in the first year in the form of additional depreciation. Yes or no? But this depreciation you can claim only for new plant and machinery which you have acquired and installed in your business, which is a manufacturing or power business. Can I say the assessee engaged in any other business cannot claim additional depreciation? The assessee must be engaged in manufacturing or power business are eligible to claim additional depreciation. Yes or no? Now the assessees doing this business cannot claim additional depreciation on assets other than plant and machinery. Even if you are doing this business, will not allow you additional depreciation for all the assets. Claim additional depreciation only on the plant and machinery. Yes or no? Take the actual cost of that plant and machinery and 20% of that claim in the first year itself. But wait. The plant and machinery on whose actual cost you are claiming 20% rate. 20%. This is the rate of additional depreciation which has to be applied on the actual cost of the new plant and machinery. If the new plant and machinery was acquired and put to use for less than 180 days, then will you get full rate or half rate? Half rate will be available. Yes or no? And the remaining 10% will be available in the immediately following previous year. Hello? So you have to check that the year in which you have acquired and installed new plant and machinery, in that year, if the plant and machinery was put to use for 180 days or more, then on the actual cost of that plant and machinery you will take full 20%. Yes or no? But if in that year the plant and machinery was put to use for a period of less than 180 days, then on the actual cost of that plant and machinery, instead of 20% you are going to take 10% only, and the remaining 10% of that actual cost will be allowed in the immediately following previous year. Got it, sir? Got it, sir? Now pay attention. New. The term plant and machinery does not include these plant and machineries. Meaning that even if you are in the manufacturing business, even if you are in the power business, even if the asset purchased by you is a plant and machinery, but if that asset happens to be this asset, if the plant and machinery is this type of plant and machinery, yes or no, on this type of plant and machinery additional depreciation will not be available. Can you claim normal depre? Yes. Normal depre we are not denying, because these plant and machineries are used for business only, acquired for business only. So normal depreciation on these we can allow, but don't come to claim additional depreciation on these 6 type of plant and machineries. Getting my point? So that means your plant and machinery on which the additional depreciation which you can claim should be any plant and machinery, should be other than these 6 type of plant and machinery. Yes or no? Number 1, the plant and machinery, ships and aircrafts. Second hand. Why second hand? Because we are bloody saying, screaming out loud that buy new plant and machinery, and you are buying what? Second hand. On second hand plant and machinery, no additional depreciation. Yes or no? Then, if the plant and machinery is acquired and installed in residential accommodation, including guest house or office premises, on that plant and machinery also additional depreciation will not be available. Then, if the plant and machinery is office appliances, including computers, then on those plant and machineries also there will be no additional depreciation. If the plant and machinery is vehicles, then also on this plant and machinery no additional depreciation will be available. And if the plant and machinery is a new plant and machinery, but the entire actual cost of that plant and machinery is already allowed under other provisions, like section 35 is there, 35 AD is there. In that section, if you have claimed the entire cost as what? Deduction, bloody we don't allow the normal depreciation on that cost, and you are coming to claim the additional depreciation. Forget about additional depreciation. We don't allow the normal depreciation also on these plant and machineries. Getting my point? Hello. Number 1, ships and number 2. Number 3, a plant and machinery which is acquired and installed in residential accommodation, including guest houses or office premises, and then office appliances, including next one, and any plant and machinery whose actual cost was already allowed. On that plant and machinery also there will be no additional depreciation. Yes or no? If the above new plant and machinery, other than these 6, any plant and machinery which is a new plant and machinery, actual cost of that, on that 20% will be allowed in the first year itself. Yes or no? Extra 20% will be allowed in the first year. Getting my point? But this 20% will become half. See, if the above new plant and machinery was used for less than 180 days in the year of acquisition, then normal depreciation will be at half rate. Will the additional depreciation for that first previous year, in the first previous year you will claim the additional depreciation also, no? Will it be at 20% or it will be at half rate? Even that will be at half rate. Remaining 10% in the immediately following previous year. One CBDT circular is there. If you are in the business of printing, or you are in the business of printing, and what is your business? Printing or printing and publishing. Even this business is also treated as manufacturing. There is a clarification given by CBDT. Now, if you see this clarification, this is beneficial for you. If you are in the business of printing and you are in the business of printing and publishing, this is a beneficial circular for you. Why? Because your business is treated as what? Now in your business, whatever new plant and machinery you will acquire, you will also be eligible to claim additional depreciation on that. Why? Because your business is also treated as manufacturing. Will you remember this? Hello sir. Next one. See, now the actual cost. We have completed all types of depreciation. Normal depreciation for assessees engaged in power business. What are you going to take? Individual asset. Actual cost of that asset. On that actual cost, you will apply prescribed rates under Appendix 1A to Rule 51A. By applying that rate, you will calculate depreciation on SLM basis, and that will be allowed every year. And if that asset which was purchased by you, on which the normal depreciation is claimed on SLM basis, is later on sold, later on in some other year, then terminal depreciation can also be there, balancing charge can also be there. Yes or no? So the terminal depreciation is already discussed there. Yes or no? Then 32(1)(2), normal depreciation for all types of assessees doing any business, any profession, including power business also can claim that. Yes or no? Wait, normal depreciation under 32(1)(2) will be available on value of the block, on the value of the block. At what rates? Appendix 1 to Rule 51. In that Appendix 1, whatever rate is there, apply that rate and claim the depreciation. On what basis? WDV basis. Additional depreciation also we have seen. So all the types of depreciation we have seen. Okay, no? Now tell me, to claim the depreciation, you need to first determine the actual cost. You need to first determine the actual cost of your asset. Because without that actual cost, the asset's actual cost is only going to be allowed in the form of depreciation. Under the head PGBP. Under the head PGBP. So pay attention. If any asset is acquired for business or profession, so for this asset, whatever actual cost is there, meaning capital expenditure, this actual cost will be either fully allowed, will either be, if there is a specific section, like we have section 35 or 35 AD, etc. Yes or no? Now in these sections, the entire cost of that asset is allowed. So under the head PGBP, cost of the asset can be allowed fully also, but in special situations. But if the asset is used for the purpose of business or profession, and there is no specific provision allowing the actual cost fully, then the actual cost has to be claimed in the form of depreciation. Hello sir. Then can I say the asset which was acquired for the purpose of business or profession, the actual cost or the capital expenditure of that asset can be allowed, or it can be allowed in small parts in the form of depreciation. Yes or no? Now if you will claim this cost in the form of depreciation, whatever depreciation you calculate, whether you calculate 32 1 1, or you calculate 32 1 2, or you calculate 32 1 1 2a, yes or no? 32 1 2a, that was additional depreciation. Yes or no? Whatever type of depreciation you claim, that depreciation is nothing but allowance of your actual cost in small parts. Individual asset, actual cost is allowed on SLM basis. Block of assets, all the actual costs are added in the block and the value of the block is calculated. The value is nothing but total of the actual costs only. Yes or no? Additional depreciation, 20% of the actual cost. Everywhere you want actual cost of the asset. What did I say? Everywhere you want actual cost of the asset, whether you want to claim this depreciation, whether you want to claim this depreciation, or you want to claim this depreciation, or even under section 35 or 35 AD, the actual cost is only allowed. Hello, as deduction. So everywhere, what will you require? What will you require? And what is the meaning of actual cost? It is defined in 43(1). What all things will be considered as a part of your actual cost? Simple, very simple, sir. Very simple. Actual cost of the assets under the head, under section, means the actual cost of the asset to the assessee, full stop. But it shall not include that cost which is borne by any other person, authority or government. Actual cost means the actual cost of the asset. No. Actual cost does not mean the actual cost of the asset. Actual cost means the actual cost of the asset to the, which does not include that part of cost which is met by others. Actual cost of this asset is 10 lakh rupees. What is the actual cost? 10 lakh rupees. So this is the actual cost of this asset. This we are not going to allow you. You tell us, out of the actual cost of the asset, how much is the actual cost to you? Sir, asset was having a cost of 10 lakh. From my pocket I have paid 10 lakhs. So what is the actual cost of the asset to you? 10 lakhs. You can claim 10 lakhs. Yes or no? But wait, if out of this 10 lakh, The government gave you subsidy, 50%. 50% of the cost of that asset will be met by the government, or you meet, the government will give you the subsidy. Possible, not possible? What was the actual cost of the asset? What was the actual cost of the asset? But what is the actual cost of the asset to the assessee? 5 lakhs. That part of the cost which is met, that part of the cost of the asset which is met by others will not be treated as your actual cost. Ignore that. So how much is remaining? Only that you can claim as a depreciation or under section 35, 35AD, etc. Will you remember? Now to calculate the actual cost of the asset, to calculate the actual cost of the assets, what all things you will take and what all things you will not take. What will be included, what will be excluded. Pay attention. Assets actual cost, the asset which are used in and it was acquired. So there is explanation 8, 9 and 10. These are the explanations given under section 43.1. So 43.1 says what is actual cost. 43.1 says what is actual cost. Yes or no? But 43.1 contains explanations also. Explanation 8, 9 and 10. Combined reading of these explanation which says that if any asset was acquired by the assessee, meaning the assessee himself has purchased those assets for the purpose of his. So in the actual cost of that asset, what will be included and what will be excluded? From the combined reading of explanation 8, 9, 10. What will be included? Number 1, the purchase price of the asset. That is the major part of the actual cost. Yes or no? So what will be included in the actual cost? Will you include the purchase price? Yes or no? Include the purchase price. Only the purchase price will be treated as actual cost. No. Loading, unloading charges, installation and erection charges, transportation and freight charges. Yes or no? Meaning all the expenses incurred till the date the asset is ready for its intended use. You are buying the asset is located at seller's premises. Now if you want to bring that asset in your business and make this asset ready for its intended use, till that time whatever expenses you have incurred, this asset will be loaded on the truck, loading charges, freight charges. The asset will be unloaded. Yes or no? Unloading charges. Then after that the asset will be installed, installation and erection charges. Yes or no? Trial runs will happen, trial run charges, and after doing all these expenses the asset will become ready for its intended use. Till that time whatever expenses are incurred are all capital in nature, has to be included to determine the cost of that asset. Getting my point? Hello sir. Only this much? No. You might have taken a loan to buy this asset. You might have taken the loan to buy this asset. So would you have paid interest on that loan? Yes or no? Even that interest will form part of the cost of the asset, starting from the date of borrowing till the date on which the asset is put to use. Till the date on which the asset is put to use. Till that time whatever interest you have paid on the loan which you have taken to acquire the asset, on that loan whatever interest is there till the date when the asset is put to use, even that interest is of capital nature, has to be included in the cost of the asset. Getting my point? Hello sir. But what about the interest after the date on which the asset is put to use? That is not capitalized, because that is not capital in nature. Now that interest will be allowed as a deduction as your revenue expenditure. 32(1)(3). 32(1). That interest will now be treated as interest on business loan of revenue nature. After the asset is put to use, any interest on loan is there, you are not supposed to add that interest in the cost. That interest will be allowed separately as your revenue expenditure. Getting my point? Hello sir. Now can I say this is the total amount of your cost? Now out of this cost, if some cost is borne by other person, reduce that. Government gave you some subsidy, etc. Reduce that, because that is not your actual cost. And out of that cost, can you see that in the purchase price of the asset, you must have also included taxes like GST, etc. Yes or no? And for which you are going to get the ITC credit. So bloody in the purchase price, if some taxes are incurred, taxes are included, and for those taxes you are going to get credit in the future, then why are you making those taxes as a part of your cost? Remove that. Yes or no? So remove all the taxes on which you are paid on acquisition of that asset, like GST can be there, custom duty can be there, excise duty can be there, and for which the credits are allowed under respective laws. Yes or no? So those taxes, if they are included in the purchase price, remove those taxes also. They will not form part of your actual cost. Likewise, you will calculate the actual cost of the asset. Unfortunately, they don't ask you these things. Getting my point? But if asked, now you know how to calculate the actual cost. Getting my point? Now tell me, this actual cost which you will determine like this actual cost which you will determine like this will be allowed fully. Section 35, 35AD. Or this amount can only be claimed in the form of depreciation. Got it, sir? Now other explanations are also there to section 43(1), which are not that relevant. Okay? Which are not that relevant, so we are skipping them. Okay? Now tell me, this explanation 13 and proviso to explanation 13 is also there, which I will be covering with section 35AD. Don't worry, I will cover this one explanation with section 35AD. Now pay attention. Tell me, there is one proviso to section 43(1). 43(1) talks about so what is the meaning of proviso? Exception. Exception to the main section. What is actual cost? 43(1). But what will not be treated as your actual cost is in the proviso. So the proviso says that if you are an assessee, have you acquired an asset for the purpose of your business or profession? Have you acquired the asset for the purpose of your business or profession? On that asset, actual cost is incurred. What was the actual cost of that asset? Example, 10 lakh rupees. Example, out of the actual cost of that asset, if some payment is made towards this actual cost has to be paid also, no? I buy an asset for 10 lakhs, so I will have to make the payment also for that 10 lakhs. Only then it can be established that okay, 10 lakh was my expense. Yes or no? So how much was the actual cost? 10 lakhs. So now for this actual cost, for this 10 lakh, I will have to make the payment also. Payment to the person from whom I have acquired the asset. Yes or no? So pay attention. The assets which were acquired for the purpose of your business or profession, the actual cost of that asset, capital expenditure, towards this actual cost, any payment is made. Towards this actual cost, any payment is made in a day to a person. And if that payment is a single payment, which is more than 10,000, in a day to a person, multiple payments are made, and the aggregate of all those multiple payments are more than. Remember, then such payments has to be made by way of prescribed modes. Which modes? Account pay check, account pay draft, ECS, NEFT, RTGS, Beam UPI, yes or no? Then other UPI, all are known as what? Prescribed modes. So in one day, you are making the payment to one person. Either the payment made is a single payment or in that one day to that person you are making multiple payments and the aggregate is more than 10,000. Either the single payment made in a day is more than 10,000 or multiple payments made in a day to that person is more than 10,000. Then that payment has to be made by way of prescribed mode. Only then that payment will be treated as your actual cost. Getting my point? But what if that payment in a day to a person which is more than 10,000 is paid otherwise than by prescribed modes? Then the payment actual cost to the extent of that payment will not be treated as actual cost. To that extent of payment, your actual cost will be ignored. You are not going to get any benefit for that actual cost. That actual cost cannot be claimed under section 35 also, 35AD also, and that actual cost cannot be claimed in the form of depreciation also. Forget about that actual cost which you have paid in a day to a person which is more than 10,000. You have paid by way of any modes other than prescribed modes. Getting my point? This is proviso. This is what is actual cost? 43(1). Proviso, what is not your actual cost? Out of the actual cost, whatever payment you will made, like this. Out of the actual cost of the asset, whatever payment which you will make like this, to the extent of this payment, your actual cost will be ignored because the payment is not made by way of prescribed modes. Will you remember this? Very important, very important. In the exam they test you on these things. Getting my point? Will you remember? Claim of depreciation is mandatory. You will have to claim the cost of the asset used for the purpose of your business or profession under the head PGBP. That is why these capital assets you are not considering under the head capital gains. You are bringing all the capital assets which are used for the purpose of your business or profession. You are bringing all those capital assets under the head PGBP because their actual cost needs to be claimed under the head PGBP only, either fully or in the form of depreciation. Claim of the actual cost of these capital assets from PGBP in the form of depreciation is mandatory. You don't have any option for that. Yes or no? Now this amalgamation and all, they don't ask you all these things. Okay, no need to do all these things. Now yes. Now I'll tell you the concept of unabsorbed depreciation. Have you heard about unabsorbed depreciation? Now any one of you tell me what is unabsorbed depreciation. Come on, tell me. That part of depreciation which could not be absorbed in this year because of non-availability of profits or less availability of profits. Your profits of this year are not sufficient or there are no profits only to take the deduction for depreciation. Now see, remember one thing very clearly, that whenever you will calculate your PGBP income, first of all you will take your, out of that you will reduce business. By the way, depreciation is not your expense. Depreciation is an allowance of your actual cost of asset. That is not your expense. All the incomes which generally earned from the business, all the expenses which are regularly or generally incurred in the business, these are all regular items. So business incomes minus business expenses. After doing this, you will get the profit. For example, business income was 10 lakh, business expense was 8 lakhs. So what is the profit remaining? What is the profit remaining? After calculating this profit only, you are going to claim the cost of the assets, because that is not a normal item, that is abnormal item. That is not a regular payment, that is a one-time payment. So if you want to claim the cost of the asset under the head PGBP, So the cost of the asset will be allowed either fully or in the form of depreciation only after adjusting the expenses out of business income, regular expenses out of your business income. Understanding? So now what will happen here? Tell me. The depreciation is nothing but capital expenditure of the asset, meaning cost of the asset, which is allowed in small parts. This is not your regular expense which we are going to allow you. So hence this depreciation cannot be considered as your business expense. You have to claim it separately. Getting my point? But after claiming all those expenses. Now tell me, how much was your profit? And the depreciation which you calculated on the actual cost of the asset, the depreciation which you calculated as per section 32 was rupees 2 lakh. Possible, not possible? So how much was your profits? And how much is the depreciation? So negative. Bloody, if you will call this 40,000 as your business loss, no, you are gone. This is not your business loss. Your business is not giving you any loss. Your business is giving you 2 lakh rupees of profit, which was not sufficient in this year to absorb this year's depreciation, which was 2 lakh 40. So out of 2 lakh 40, the depreciation to the extent of 2 lakhs could be absorbed in this year because the profits available was 2 lakh. The excess 40,000 depreciation which could not be absorbed in this year, that is this amount. You cannot call this amount your business loss. This amount will be treated as your unabsorbed depreciation. Will you remember this? Yes or no? Yes or no? Take the second example. 10 lakh. Business income. Business expenses 11 lakhs. Now does your business have any profit? This you can call as your business loss. This is your business loss. And 2 lakh 40 was your depreciation. Reduce that. Now total negative will be, bloody, if you will call this entire 3 lakh 40 as your business loss, you are gone. This entire 340 is not your business loss. This entire 340 is not your unabsorbed depreciation also. Out of this entire 340, 1 lakh was your business loss and the remaining 240 is your. Why are you bifurcating this? You should have called this amount, as business loss only, no? There are different rules for set off of business loss and carry forward of business loss, and there are different rules for set off and carry forward of unabsorbed depreciation. See, set off and carry forward of your business loss is governed by set off and carry forward provisions 70, 71 and 72, and set off and carry forward of your unabsorbed depreciation is governed by section 32 subsection 2. So both the set off and carry forward are governed by different sections. So you should know that the remaining amount is business loss or remaining amount is unabsorbed depreciation. Otherwise you will do wrong set off and wrong carry forward. If you have any business loss, if you have any section 70, 71 and 72, it says that business loss can be adjusted within the same head, against the profit of any other business. If profit of other business is not available, then the loss will become the loss of PGBP head, which can be adjusted against income of other heads except salary. And if it cannot be adjusted against other heads also, then it can be carried forward to subsequent years for maximum 8 years. And after its carry forward in the subsequent year, the business loss can be adjusted only against business incomes of the future years. Hello sir. 70, 71, 72 talks this about your business loss. Now if you will go to 32.2, which talks about unabsorbed depreciation, unabsorbed depreciation can be adjusted in this year. Unabsorbed depreciation of any business can be adjusted from income of any business, or if not done, it can be adjusted against the income of any head except salary. And if that is also not done, it will be carried forward to subsequent year for indefinite period. For not 8 years, indefinite period, and after it's carried forward in the subsequent year, it can be set off against business income also, income of other heads also, except salary. This is unabsorbed depreciation, set off and carry forward, which is given in 32.2. Now just imagine, if by mistake you will call this amount as your, you will give the treatment of section 70, 71 and 72, which is wrong. For this amount, the treatment should be given as per 32.2. But for that you need to identify this amount, no? Getting my point? So this was the concept of your unabsorbed depreciation. I hope you understood this thing. Hello sir, depreciation concept is over. Depreciation concept is over. Okay. Now we are going to see another concept. See, this much only you read in section 35. But wait, very important thing I forgot to tell you. I'm sorry, I forgot to tell you. What is this? Under section? What is this? Under section 2A. Tick, cross. Tick, tick. You must have understood what I am going to write now. 115 BSE. 115 BSE. Not followed. 115 BSE. If you follow 115 BSE, will you get normal depreciations? Yes. But you will not be eligible to claim additional depreciation. But if you will follow, if you will shift out of 115 BSE, if you opt out of 115 BSE, you are going to get normal depreciation as well as additional depreciation. That you have to remember. Okay, no? So under the head PGBP, impact of 115 BSE is there, but this impact is on additional depreciation and not on normal depreciation. Yes? Now pay attention. Section 35. There are two parts of section 35. One is expenditure on scientific research. Another one is donations, meaning contributions for scientific research or statistical research or research in social sciences. See, any donation which you make now will not be allowed as a deduction under PGBP, because donation is not considered as business expense. So any type of donation which you will see, you have to disallow, because that is not related to business. But section 35 specifically allows the donations which you are making for scientific research, donations which you are making for statistical research, the donations which you are making for research in social sciences. If you do such kind of donations, may or may not be related to your business, can still be allowed as a deduction. Any other donation, what did I say? Any other donation will not be allowed as a deduction under PGBP. So the donation will be made to a person, any person who must be engaged in doing scientific research, statistical research, research in social science. That person will be any approved institution, any institution, association, organization, university, college, any approved institution, any. They are doing research. What type of research they are doing? Scientific research, statistical research, or research in. So to do those researches, the government would be funding them. But sometimes the government funding is not enough to conduct their research. So the government wants the businessmen also to participate. Come forward and give your money as a donation to these type of institutions, because the money given by you will help them to conduct different type of research, which is very important for our country. Yes or no? Whatever amount you have donated, may or may not be related to a research related to your business. Getting my point? Whatever amount you have donated may or may not be for a research related to your business. Still it will be allowed as a deduction. Entire amount donated by you will be allowed as a deduction under section 35. Don't remember the subsection and clauses. Under section 35, the entire amount will be allowed as a deduction. Will you remember this? But wait. If you follow 115 BAC, then this deduction for donation under section 35 will not be allowed. If you want to claim this deduction for donations, it will be allowed only if you shift out of 115 BAC. Are you an assessee? Tell me yes. Engaged in any business or profession? You are making donations. To whom you are supposed to make the donation? Remember, approved. Approved institution, associations, organizations, colleges, universities, etc. So to those notified, approved institution, etc., you are making a donation. Whatever donation you are making for scientific research, statistical research, or research in social sciences, which may or may not be related to your business. That entire amount of donation, full amount of that donation will be allowed as a deduction under section 35 if you shift out of 115 BAC. If you don't shift out, if you remain in the default tax regime, it will not be allowed. It will be disallowed. Will you remember this, everyone? Now, this is the first part of section 35. Now, let's come to this is the second part of section 35. Let's come to the first part. First part is expenditure. Expenditure on which is related to your business. Assessee, are you doing any business? In that business, you are conducting any scientific research, you are yourself doing, or you are getting it done through some laboratories, etc. Yes or no? Hello. So a facility or a laboratory will be there. From that laboratory you are getting it done. It is as good as done by you only. Getting my point? Assessee, you are doing any business? Yes or no? For your business, you are doing some scientific research. So for that scientific research which is related to your business, will you incur any expenditure? Will you incur any expenditure? Any expenditure. Even if the expenditure is a revenue expenditure or a capital. Sir. Capital expenditure means assets are purchased for scientific research. Assets are entire cost of that asset will be allowed as a deduction. No need to claim that in the form of depreciation like a beggar. Small amount will allow. No, full amount you claim as deduction. Even the cost of asset is allowed as a deduction. Revenue expenditures will be allowed, and even the capital expenditures will also be allowed as a deduction. What type of capital expenditure will be allowed? Come on, tell me. What type of capital expenditure? Any capital expenditure. Any other than the cost of. Because land is not treated as a specified asset whose cost will be allowed under the head PGBP. Do you remember land we have already thrown out? Where? PGBP. So even a land is purchased for scientific research, the cost of that land cannot be claimed under PGBP head. Yes or no? Any other asset is purchased? Any other asset is purchased, cost of that asset will be allowed fully. Yes or no? Pay attention, pay attention. See, what is this? On. So assessee is engaged in any, and for this business, a scientific research is related to this business. And for this scientific research, expenditure is incurred. What type of expenditure? Revenue or entire revenue expenditure will be allowed as a deduction. Entire capital expenditure will be allowed as a, except the cost of. Will you remember this? Now see, it will be allowed in the year in which it is incurred. The expenditure will be allowed in the year in which it is. If the expenditure is incurred in your previous year, claim it as a deduction in your previous year. If the expenditure is incurred in the next year, claim it as a deduction in the next year. The year in which the expenditure is incurred, in that year itself the expenditure will be allowed as a deduction. But this happens only after the business is commenced. Sometimes these type of expenditures are incurred prior to commencement of business. Business is yet to be commenced. Business is yet to be commenced. But before the commencement of business, some scientific research was going on. Yes or no? On that scientific research, revenue expenditure and capital expenditure will be incurred. Can you claim that expenditure which was incurred prior to commencement of business? The answer is yes. That is known as pre-commencement revenue or capital expenditure. That is known as pre-commencement revenue or capital expenditure. For example, your business was commenced on 1st of April 2024. This is the date of commencement. Yes or no? After the date of commencement, whatever expenditure you will do, that will be post commencement. That will be allowed in the year in which it is actually incurred. Yes or no? But is it possible that before the commencement of business, you might have incurred some revenue expenditure or capital expenditure other than cost of land? Yes or no? Even this capital expenditure and revenue expenditure which you have incurred prior to commencement will be allowed as a deduction, provided this expenditure is incurred within 3 years, immediately preceding to date of commencement. So what was your date of commencement? Immediately before that, 3 years you are supposed to count. Within those 3 years, whatever revenue expenditure and capital expenditure you have incurred, that entire revenue or capital expenditure will also be allowed in the year in which you have commenced the business, assuming as if it is done for the commencement year. Getting my point? Hello. So are you an assessee? Tell me yes. Engaged in any business? So for this business, you are conducting any? The scientific research is related to your, for that scientific research, expenditure will be incurred. What type of expenditure? Revenue or capital? Capital expenditure other than cost of. The revenue expenditure incurred within 3 years prior to commencement, and any revenue expenditure incurred after the commencement will be fully allowed as a deduction in the year in which it is incurred, if it was post commencement, and if it was pre-commencement, then it will be allowed in the year in which the business is commenced. Same thing for capital expenditure. The capital expenditure other than cost of land will also be allowed as a deduction in the year in which it was incurred. But any capital expenditure incurred within 3 years prior to commencement of business, pre-commencement capital expenditure will also be allowed as a deduction in the year in which the business is commenced. Will you remember this? Section 35, done. But there are few important things for you to remember in section 35. Should I? But there is one requirement. See, the pre-commencement capital expenditure, the pre-commencement capital expenditure will be allowed as a deduction in the year in which the business is. If you want this, then there is a condition. It must be capitalized in the books of accounts as on the first day of the financial year in which the business is, meaning those assets must be capitalized in your books. You must have shown those assets for scientific research. You must have shown those assets in your balance sheet as on the first day of the year in which you have started the business. Bloody, if you have not taken the assets in your books and still claiming the cost of that asset as deduction, we are not going to allow. So if you want to claim that asset, show that asset in your books, no? Capitalize that asset in your books for the year in which the business is commenced. Yes or no? Now pay attention. Any capital expenditure. What is the meaning of capital expenditure, sir? What is the meaning of capital? I told you that under this head, whenever I talk about capital expenditure, whenever I am talking about capital expenditure, immediately your tube light should start. That sir is talking about assets used for the purpose of business or profession. Yes or no? So any capital expenditure which was incurred for the purpose of scientific research, meaning the asset which was acquired for the purpose of scientific research, you must have incurred the actual cost on the assets for the, that actual cost is only capital expenditure, which is allowed under section 35, which is allowed under section. Have you claimed the entire cost as deduction under section 35? Now on that, will you claim depreciation? Meaning you want to claim this cost again in the form of depreciation, will not be allowed. Can you claim this same expense, same capital expenditure under any other section? No. Bloody, if we have allowed this cost entirely under section 35, now you cannot claim this cost under other heads, other provisions, and you cannot claim this capital expenditure in the form of depreciation also. Will you remember this important point? Now, proviso to 43(1) is also applicable. Hey, sir, what is 43(1)? What is proviso? What is 43(1)? Actual cost. What is proviso? What is not treated as actual cost. What are you going to claim here? Under section 35, what are you going to claim? Actual cost. Actual cost which was paid in a day to a person amounting to more than, by way of any mode other than, will not be treated as, so will not be allowed here also. Hello sir. So proviso to 43(1) applicable on this actual cost? Yes, applicable. To that extent the actual cost will not be allowed. Yes or no? Next one. Now if you are buying land and building in a composite agreement, cost of building is allowed, but cost of land is, so what you will have to do now? If you are buying land and building for scientific research and composite agreement is there to buy land and building together, land and building, a single asset you are buying, but that single asset is not a building, that single asset is not land, it is land and building. Now for that land and building you have made the payment. For example, the payment made is 80 lakhs. Payment made is 80 lakhs. Is it the payment for land only? Should be disallowed. It is the payment for building only. Should it be fully allowed? Land and building. What you will do? Out of this, remove the value of whatever will remain will be the, that will only be allowed. And what amount you will remove as the cost of land? Out of 80 lakhs, how much will be the cost of land? The fair market value of that land out of 80 lakhs will be treated as cost of land, and the remaining amount will be treated as cost of building. Only that can be claimed as a deduction. Yes or no? Now, you remember something, some calculations like this we did? Wait, I'll show you. Wait. Can you see these calculations? The same type of calculations I have done here also. See, first you will take business incomes minus, so your business is giving you a profit of, now from this, first you will claim the cost of the assets allowed in the form of depreciation. Section 32 comes before section 35. Section 32 comes before. So once you claim the depreciation will be on those assets which are used in the business, not for scientific research, for other purposes. Yes or no? So for other purposes, the assets are used in the business. Their cost will be allowed in small parts in the form of depreciation. Claim that. After that, any profit remaining? Yes. Any profit remaining? Profit was 2 lakh. Depreciation on the assets used for the purpose of business in normal operations was 1 lakh. You claim that. 1 lakh profit is still remaining. Now, expenditure on scientific research. What did I say? Has revenue expenditure also, capital expenditure also. Revenue expenditure is already considered here. Revenue expenditure is already considered here. But the capital expenditure on scientific research cannot be covered here because that is not a regular or normal type of business expenditure. That you have to claim separately, but after the claim of depreciation, because depreciation comes under section 32 and capital expenditure on scientific research will come in section. Which section will come first and which section will come later? So what is to be taken first? Depreciation. And what is to be taken next? Scientific research, capital you will claim only. So what about the revenue expenditure? Bloody that revenue expenditure you have already claimed here. Getting my point? Now tell me, if the capital expenditure on scientific research, meaning the cost of asset, you are reducing here 1 lakh 50. Do you have profits? From that profits you will reduce this. Whatever amount will remain, no, will not be treated as your business business loss. This will be known as unabsorbed capital expenditure on scientific research. The treatment will be same which you give for unabsorbed depreciation. It can be adjusted in this year from any other business income. Yes or no? If not, then against any head of income except salary. And if that is also not possible, carry forward to subsequent year. In the subsequent year, it can be set up against business income also, other heads income also except salary. And it can be carried forward for indefinite period. The same treatment which you gave for unabsorbed depreciation will be available for unabsorbed capital expenditure on scientific research. Will you remember this? Now, the asset which is used for scientific research, you will incur cost on actual cost of that asset. Yes or no? And that cost is allowed. That cost is, for example, the asset which you took for your scientific research, for example, a plant and machinery you acquired. Plant and machinery you acquired for scientific research. On that plant and machinery, what was the cost incurred by you? 5 lakhs. This entire 5 lakh was allowed under section. So can I say, out of your business income, 5 lakh was reduced. Out of your business income, 5 lakh was. So did you pay tax on that 5 lakh rupees of business income? No. Out of your business income, 5 lakh rupees of business income was reduced because you took the deduction for this capital expenditure. So to the extent of 5 lakh rupees of business income, have you paid tax or you have not paid tax? To the extent of this cost, your business expense was reduced. So can I say to the extent of this amount, you have not paid any tax under the head PGBP, your business income was reduced. Any recovery. What did I say? By transferring this asset. By transferring this, selling this asset, salvage, scrap, transfer of this asset by anywhere. This asset was there in your business, used in the scientific research. From the scientific research only, this asset is going out. From the scientific research only, this asset is going out, without it being used for other operations in your business. Getting my point? Are you using that asset from scientific research to your normal operations? No. Without it being used for other operations in your business, it was used for scientific research, and from there only the asset is transferred, sold. 3 lakh rupees you received. How much you received? This 3 lakh is out of that same amount of business income which we have already allowed. How much you claimed? 5 lakhs. So your business income came down by 5 lakhs. Out of that, now you are recovering how much? 3 lakhs. That will be treated as your deemed PGBP income. Simple. Cost of the asset was? Cost of the asset was? And how much you have recovered? 3 lakh. What is the effective cost of the asset? So 2 lakh should have been claimed, no? How much you have claimed? How much extra? That you reverse. Deemed PGBP income. Common sense, which is very uncommon. Hello? Now tell me, if that same asset was sold for 5 lakhs. Same asset was sold for the 5 lakh of business income which we reduced. See, now you are recovering that same business income. That entire 5 lakh will be your deemed PGBP income. Getting my point? Sir, now you are selling that asset for 7 lakhs. Oh, 5 lakh which we reduced from your business income, you are entirely recovering that 5 lakhs. That 5 lakh will be your deemed PGBP income. How much extra recovery you have done? That will be your capital gains. Will you be able to do it? So the asset which was used in scientific research, whose cost was already allowed under section, later on, without being used for any other purpose in the, are you bringing it for any other purpose in your business? No. You are using in scientific research, from there only you sold. You transferred. That time, the amount which you will recover, by transferring, either that amount or the amount of that asset which was actually allowed under section 35, whichever is, that lower amount will be treated as your. So now tell me, what was the amount allowed? And what was the first case? 5 or 3, whichever is. 3 lakh will be your deemed PGBP income. Hello? What was the cost allowed? Second, how much you recovered? In my second example, 5 lakh or 5 lakh, whichever is lower, any 5 lakh. 5 lakh will be your deemed PGBP income. Hello? What was the cost allowed? And how much you recovered? You cannot charge anything more than what was allowed. How much was allowed? So under the head PGBP, deemed PGBP income will not be 7 lakh, it will be 5 lakh only. Sir, what about that extra 2 lakhs? Consider that amount as your capital gains. Yes or no? Asset used in scientific research. Actual cost was allowed. Actual cost was, how much actual cost was allowed? 5 lakh. Now, you are not transferring that asset to someone. From scientific research, you are not transferring it. Now you started using that asset in your business only for other operations. Possible, not possible? So now that asset will not remain in scientific research. Now that asset will come in the block with your normal assets. The block of assets. What was the asset? Plant and machinery, which was depreciable at the rate of 15%. There is a separate block for this plant and machinery. Yes or no? So if I say that I had a block of plant and machinery depreciable at the rate of 15%, separate block is there. Now this block has A, B, C, D. These assets are there and having this much value. Already these assets are used in my business in the normal operations. Yes or no? So these assets are in the block. Their values, their cost is also there in the block. Getting my point? These are those assets which are not used in my scientific research. These are used in my normal business operations. Hello, sir. Now what you did? You acquired one plant and machinery having how much rate of depreciation? 15%. But this plant and machinery you acquired for scientific research. What was the cost of this plant and machinery? 2 lakhs. Example, what was the cost? This entire 2 lakh. If the plant and machinery would not have been purchased for scientific research, that plant and machinery would have come in your block. This plant and machinery will not come in the block because its cost is not to be allowed in small parts. Its cost will be fully allowed. So have you brought this in the block? No. You have purchased this for, so keep it away from the block. don't put this machine in the block as of now. Why? Because you are using it in the scientific research. What was the cost? 2 lakhs. No, I have written 2 lakhs. Ayyo. What was the cost of that plant and machinery? New example I have taken. Old example, forget. Now new example, what is the plant and machinery? 2 lakh rupees is the cost. Is it used for scientific research? Yes. So will you claim this entire 2 lakh under section 35? Yes, entire 2 lakh is allowed under section. Why? Because the plant and machinery is acquired in my business, but it is not used in the normal operation. So it will not go in the block. It will remain separate, and its entire cost you will claim in section 35. Yes or no? Have you claimed the entire 2 lakh under section 35? Have you claimed this entire 2 lakh in section 35? And this plant and machinery is in your business being used for scientific research. Now what happens now? Its use in scientific research is over. And if you will sell it directly from the scientific research, then what is to be done we have already seen. Hello? But now I am telling you a different situation. Now in this situation, it was used in your business in scientific research. Entire 2 lakh is already allowed. Now from your scientific research, you are taking it out and you are keeping the asset in your business only. But in other operations, normal operations, tell me yes or no. Now don't you think the assets which are already used in the normal operations are given in block? Hello? In the block, there is already one block of plant and machinery having 15% rate. So now this plant and machinery I will have to bring under this block, because now this, like other assets used in the normal operation, now this asset will also be used in my normal operation. So I will have to bring this under the block. Addition will happen. Addition will. What will be the amount of additions? I will write now. Common sense. If you write that 2 lakhs which was already allowed, bloody, then that 2 lakh will form part of the block and will be again claimed in the form of depreciation. That 2 lakh entirely allowed. Hello? So whenever you will bring this machine for normal operations, what will be its actual cost? NIL. Why? Because the entire cost we have already allowed. Now if you will bring in the normal operations, if this machine will come in the block, add. Now the number of machines will not be 4, it will become 5. But the machine which you will bring now, its actual cost will not be taken as 2 lakh because it is already allowed. Its actual cost will be taken as nil. Understanding? Done. Section 35 over. Section 35 over. See, actual cost has to be taken as nil. Later on used for any other purpose in the business of the SSA. Now tell me, if this machine is later on sold, this machine is, don't you think it will be sold from the value of the block? It will be sold from the block, and whatever amount you will recover will be automatically adjusted in the value of the block. To that extent, the depreciation will not be allowed. No need to charge that amount separately as your deemed PGBP income. Hello sir, got it? So this was your section 35. Entire thing I have discussed. I have not left a single thing. I am telling you. You just have to go and read the stuff. You will come to know that everything I have covered in section 35. Okay. Now coming to, we'll take a break of 30 minutes. After that we are going to meet and we'll continue from here. Okay. See you after half an hour. Did you enjoy this? Interesting, no?